And good morning, good evening, good afternoon, traders and students all around the world. This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Remember the three pillars, everybody. What we're trying to do, we're trying to build a strategy and or a system that is easy to obey, easy to understand. Then we are trying to learn about the risk management rules and how those rules work inside our strategy and or system, and the big one, the psychology part. And talking about psychology, everybody, what do champion beginner traders say? Champion beginner traders say, I am not going to live on a trade, I'm not going to live and die on a trade by trade basis. And of course this is a quote from Mark Douglas. And if you ask me, when the market scares the beep out of you, don't be afraid to do the right thing, right? How many times we are afraid, right? Hello Miguel, hello Salbakti, hello Zuelius, hello King of Swings, hello Eni, hello Tembo, how is everyone? Remember everybody, 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. And for homeworks or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. And today's rules for trading the Contrarian Fibonacci. Hello, learn to trade. So let's dive into the live charts, everybody. Okay, now those are the rules from the Contrarian Fibonacci. If you don't have it yet, take a screenshot, take a picture. And we are going to use the Contrarian Fibonacci to number one trade retracement. And this is what we're going to talk about today, everybody. Not about how to find the C. We talked about this already, but how to trade retracement. And this is risky for the beginner trader. Okay, now question number one. Okay, we're going to do this trading exercise, right? And in some point in time the market was like this, right? Okay, we don't have the crystal ball, so this was EuroCAD. And again, everybody, Zuelius and other traders were asking me, can we do the Fibonacci's on the 15-minute chart? We can do it, but the problem with the 15-minute chart, everybody, the market is going to move. Okay? The reason why we are on the higher time frames is because the market is not moving, but we are telling you that you are going to use the same concepts. Hello Christian, how are you? So you are learning how to think, everybody. Okay, you're not learning, oh, this is the weekly chart and I'm going to apply this on the weekly chart. No, you are going to do exactly the same on the 15-minute chart, on the 5-minute chart. Okay, everybody, don't get attached to the currency pairs and to the time frames. Oh, I learned so much. Really? Then you know how to use the concepts on every currency pair and every time frame, right? So one more time, don't get attached to the time frames and to the currencies. Okay, you have 23 not exotic currency pairs times 4 time frames or times 6 time frames. I mean, you can trade anything you want, right? Now, back to the lesson. Do we agree, everybody, that the market broke the uptrend line in here? Do we agree on that? Do we agree that the market broke the uptrend line? And talking about the Contrarian Fibonacci and the rules how to trade. Question: what makes a Contrarian Fibonacci less or more risky as a trading tool. As a trading tool, as a decision maker of a trade. I hope, sorry for my English guys, but maybe too philosophical, right? Anyway, what makes a contrarian Fibonacci less or more risky as a trading tool, as a decision maker of a trade? Okay, Vincenzo, where are you from, Vincenzo? Okay, so what we're going to do very briefly, we are going to draw the original one first. Okay, so A to B, just to have the original one, everybody. A to B, A to B, A to B, and one less time, right? One less time, A to B, right? And we are here right now. We are here right now. And maybe this is not a good example, right? Because, let me see the chart. We need a deeper retracement. Highs, lows. Okay, bad example, everybody. We're going to delete this one. But we are going to do what? Let me think. We have a shallow retracement. Okay, another one, everybody, not a problem. Okay, we are on the, what we are going to trade, everybody, is this short term, delete. So in some point in time, right, this would be the long term, this would be the medium term, and the aggressive one, the aggressive one would be something like this. And again, the original Fibonacci, A to B, it's up in here, and Fibonacci retracement, there you go. Okay, so this is the original Fibonacci on the weekly chart, and we are going to trade this retracement on the 1 hour chart. Okay, everyone? And the question is here, right? So let's adjust this. Let's adjust this one. There you go. What makes a contrarian Fibonacci less or more risky as a trading tool, as a decision maker of a trade? Vincenzo, maybe contrarian Fibonacci is less risky after trend line break. No, sir. Original has not a confirmed C. Zuelius, we are not going to talk about the C today. I'm from Italy, come stai? Per questo volevo chiederti di dove sei, Vincenzo. King of Swing, contrarian Fibonacci is less risky after extension. No, sir. Okay, so rules for trading the contrarian Fibonacci. This is the answer, everybody. This is the answer. A contrarian Fibonacci is going to be less risky as a tool, not a trade. Don't confuse apples with bananas. Is going to be less risky as a tool when is going to equal an original Fibonacci on the smaller time frames. This is the rule, this is the concept. Okay, what makes a contrarian Fibonacci less or more risky as a trading tool, as a decision maker of a trade? Answer: a contrarian Fibonacci is going to be less risky as a tool, not a trade. Trading retracement is riskier than trading extensions when it's going to equal an original Fibonacci on the smaller time frame. Miguel, since it trades retracement, these are more difficult or risky because are shorter than in the original. Yes, sir. So, everybody, this lesson, it's an upgrade of the multiple time frame trading. Remember, everybody, when we talked about the multiple time frame trading, we had so let's make it an up, right? So we would have something like this, and the original Fibonacci on the daily is up, right? And the contrarian Fibonacci, change the colors, the contrarian Fibonacci, man, I don't have it. Okay, let's change to violet, 14% violet, and the green is going to be white, 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 1618 extension white, blue, this is going to be orange, and orange, and this is going to be our contrarian Fibonacci. Let's save it. Okay, so when we talked about multiple time frame trading, we have an original Fibonacci up on the daily chart, but on the smaller time frame, our original Fibonacci was positioned like this. Do you remember, everybody, the example? And again, one more time, if this is your first time, everybody, with us, please go back to the Ducascopy YouTube webinar page and start to watch the lesson from the lesson number 1, what is market structure. Okay, if you don't get market structure, the market wave, the rules and the concepts from the beginner module and from the basic module, the lessons are just going to be more and more challenging for you. Okay, everybody, do you remember? So this is the answer, you know, a contrarian Fibonacci. So what we're going to trade on the weekly chart is the contrarian Fibonacci, and the contrarian Fibonacci is going to be less risky as a tool, not a trade. Don't mix apples with bananas. Hello, time to shine. As Miguel says, since it trades retracements, these are more difficult and risky, and the answer is yes. But if I want to trade a contrarian Fibonacci, if I want to trade a retracement, I'm going to have a higher chance if my contrarian Fibonacci is going to equal an original Fibonacci on the smaller time frame. Okay, everybody, this is a concept you must learn if you are going to use the Fibonacci to trade retracements. Is anybody in here who does not understand this? Please type in the chat yes, okay, clear, or please type in the chat no, not clear. Namaste Patak, how are you? Clear, okay, great, perfect. So we are here right now, okay, we are here right now, and this is the weekly chart, right? Now we are going to jump from the weekly to the 1 hour chart, just an example, and we are going to compress the chart. We're going to compress the chart. Let's wait, let's wait. Okay, so let's do some other thing. Let's go back on the weekly so we can see the pictures. Let's go back on the weekly, everybody. Let's go back on the weekly, and what we are going to do, right? Well, we don't have the crystal ball, the market is here, kind of sideways with the weekly candles, and we are going to clone the chart, and we are going to move on the daily, right? And then we're going to clone the chart, and then we're going to go on the 1 hour chart. Okay, and we're going to use the same concepts, nothing changed. Okay, so from the daily, right, what do we have? We have, finally, right, what do we have? We have the market, it's making lower lows, lower highs, right? Let me check this one. Okay, do we agree, everybody, that we have lower lows, lower highs in here? From the daily chart, the market is not making higher highs and higher lows anymore, but it's making lower lows, lower highs, right? Yes, clear. Miguel, can you repeat, please? Yes, sir, of course. What makes a contrarian Fibonacci less or more risky is when on the smaller time frame, Miguel and everybody else, on the smaller time frame, so this would be like this, right, on the daily chart. So this is the daily chart, just an example. This is the daily, and down in here we have the 1 hour chart. Could be the 1 hour chart, could be the 4 hour chart, could be the 2 hour chart, you know. Okay, and if you look at the quadrants, everybody, if you look at this quadrant is this quadrant. Okay, Miguel? The smaller the time frame, the more swings we are going to have. Right? Nothing special to understand, right? So on the big picture, on the daily chart, our original Fibonacci is up. But on the 1 hour chart, our original Fibonacci is down. And if you look at those two, Miguel, so circle inside the quadrant, when we are going to trade the retracement on the daily, this retracement equals to the original one on the 1 hour chart. It happens all the time. You have thousands of examples right now in the market between all the charts. You know, the original Fibonacci on the monthly, it's up, weekly up, daily down. Daily up, 1 hour down, 1 hour up, daily down. I mean, you know, so when those two equal one another, then you have a greater chance. But we are going to explain the rules to everybody. Okay, Miguel? You are going to have a greater chance as a tool when those two are going to equal. One is going to equal the another. Okay, great. So we're on the daily, and the market was start making lower lows, lower highs, right? And we want to trade the contrarian Fibonacci. So we're going to change, and this is our contrarian Fibonacci on the daily chart. Okay, and it's going to be sub A clone. We're going to have this sub B, right? Edit label, sub A, sub B, clone. We are going to have this sub C, and then clone, and we're going to have this sub D, right? Sub D down here. Okay, now this is on the daily chart, right? And what can we do from the 1 hour chart? Well, if we have a down Fibonacci on the, and let's make it like this maybe. If we have a down Fibonacci, sub A, sub B, sub C, right? Then we have a down Fibonacci also on the smaller time frame, right? The 1 hour chart. Passion, how do you know? Because the higher time frame controls the smaller time frame, right? And because we have more swings on the smaller time frame, in this example, everybody, our Contrarian Fibonacci on the daily is going to equal, as a direction, is going to equal, not as a swing, as a direction, is going to equal our Fibonacci original one on the 1 hour chart. So this is what I forgot, right? So a Contrarian Fibonacci is going to be less risky as a tool when it's going to equal as direction, not as a swing, as direction. An original Fibonacci on the smaller time frame. Okay, so this is on the left side, everybody, you have the daily, on the right side you have the 1 hour chart, right? Okay, but remember, we are trading the daily. Okay, we are trading the daily, right? So we are trading the daily right now, and blue goes to blue, and let's say whatever, you know, it doesn't matter really. I'm going to enter when the market is going to break this kind of sideways movement or whatever, but blue goes to blue, and finally the market was sideways, went up and down, right? So this was my entry. The market hit the blue one, and this is the new swing. Sub A goes to sub C, and the sub B goes to sub D, right? And this is the market right now, right? And it's, again, it's falling, it's moving all kinds of stuff, going down, right? Going down, hit again. So in this time, you know, this was the market. You know, counter trend lines, something like, let me jump into the chart, let me zoom in. Counter trend line like this. Okay, there you go, sub A, sub B. So we had the first swing, right, and we had this second swing on the daily. Now, how would this reflect on the 1 hour chart, right? So our sub A, it's at 136, right, and we are going to monitor also the 1 hour chart. Okay, we are trading on the daily, everybody, but we are monitoring the 1 hour together. So 1 hour is like this, right? Green goes to green. This was the, let's make it here. So this is the A of the 1 hour chart. Could be the 2 hour chart, you know, could be the 4 hour chart. So A, this is going to be the B, this is going to be the C, right, and down here is going to be the D. We learned these rules, right? Nothing special, nothing difficult, and again, A goes to C, right, and B goes to D. So we are monitoring the 1 hour chart, and look what is going to happen sooner or later, right? This is our original Fibonacci on the 1 hour chart, and we are monitoring it. The market is going up, sideways, going down, sideways. This is on the 1 hour chart, right? So this is the C for the time being. we have a projected D. We are just monitoring, we are trading the daily, but we are monitoring the 1 hour chart. And the market is going sideways, you know. Let's see, it's moving sideways. And bam, it hit our D extension again, right? So this is our D. And what we're going to do? Well, we are going to adjust our original Fibonacci on the 1 hour chart one more time. So A goes to C, right? And B goes to D, right? Nothing special, we learned this. And we are going to monitor the 1 hour chart, you know. And this would be the counter trend line break on the daily also. And the market is moving, you know, moving sideways, whatever. And I'm not sure about this one. It didn't broke the A yet, right? It didn't broke the A. It didn't break the A. The counter trend lines are going to be something like this. And we are monitoring the 1 hour chart. And there you go. Do we agree, everybody, that on the 1 hour chart the market broke our original Fibonacci on the 1 hour time frame? Passion, can you repeat? Yes, sir. Do we agree that we were monitoring the 1 hour time frame, okay? Do we agree that the market broke the A of our original Fibonacci on the 1 hour time frame? It's a yes or no question, everybody. You can say yes, you can say no, you can say I don't know, no problem, you know, we're here to learn. You know. And the next question is, everybody, so when the market breaks our Fibonacci on the smaller time frame, you know, then the next question is, should we trade our contrarian on the daily or not? Because this concept goes in the nose of the other concept, which is, yes, but the higher time frame controls the smaller time frame, right? So we are in, this is February 2013, and February 13th. So let's find February 13th on the daily chart. So we know that we are talking about the same thing. February, March, February, whoops, February 13, February 1, 2, February 13. Okay, not a great example, everybody, because as you can see, the market still pushed down, right? Okay, so this was here, this is February 13th, and as you can see, the market broke the A of the 1 hour chart, but then the market reversed and finally pushed down, right? But in some point in time, what I want to show you, everybody, is in here. So this would be our next swing, right? So this would be our next sub A, sub B, right? And sub D is going to be down there, and sub C is going to be somewhere in here. So let me see, we need to go to the 5th of April on the 1 hour chart. Okay, 5th of April. So we are here, and then the market fell again. So we're going to redo. Let's go to the 5th of April. This is our original Fibonacci. And market broke again, and then falls again, and broke again. And finally, this would be our new Fibonacci on the 1 hour chart. And green goes to green. Green goes to green. So this would be this one. We have a gap here. Doesn't matter. We have a gap. And this 1618 is here actually. Not in the gap, but it's here. And we are waiting for 5th of April. We have another swing on the 1 hour chart. And 5th of April, I believe this is the swing right now. Green one, let me check, 1306. Let me see if this is the low. And yes, it is. This is the new Fibonacci on the 1 hour chart in here. And we are trading the retracement, and we are April, right? And the market is moving, and again, right? So here would be the same example. Here the market broke our 1 hour Fibonacci, original one again. Okay? But this time, what's the difference? The previous example was not the best one. What's the difference? When the market, you know, broke our original Fibonacci on the 1 hour chart, what was the day? What was the day? It was 15th of April, right? So 15th of April. Tell me, everybody, look at the daily chart. Look at the daily chart. We are trading the retracements on the daily chart, right? Look at the daily chart and tell me, I'm going to zoom in, everybody, just to arrange the counter trend line, you know. Tell me, do we have a signal in here to enter the market short? Red arrow. Do we have a signal? And so if we would enter with this bearish candlestick formation, and this would be the risk on the daily chart, this would be the reward, right? It's red, so red goes to red, background color. Okay, so two questions. Question number one, do we have a signal on the daily chart? And would you enter? Oh, come on, you know, come on, let's be honest here, you know. No, I would not enter, of course not. I just show you that the market's going to go in the wrong way. But let's be honest here. Let's be honest, everybody. Do we have a signal here on the daily chart? Yes, finally. You know, come on, guys, you know, I've been there, you know, I did all this stuff. You know, I know exactly how you think. Oh, you know, you cannot possibly. I know exactly how you think and how you feel. I've been there, believe me. Do all the stupid things and burn the accounts and change strategies and bought robots and expert advisors and do thousands of courses, read thousands of books. I've been there, believe me. So we have a signal here, right? And we are do we have anything? Do we have any reason? Okay, and let's be honest here. I'm going to delete the previous. Do we have any technical tool that is telling us not to go short. I'm not talking about a concept, because we all understand concept, and the concept is that trading retracements is risky. But do I have any technical reason not to enter this trade? Signal is right, correct, right? I have a counter trendline break confirmed. I have bearish candlestick formation. The market is still making lower lows, lower highs. Lower low, lower high. If you want, lower low, lower high, lower low. The market's making lower lows, lower highs. You know, the market didn't find a confirmed C, if you want. So I don't have any reason not to enter as a retracement trader, right? There is a signal you should enter. And here is where it comes, everybody, this concept in place. A contrarian Fibonacci is going to be less risky as a tool when it's going to equal as direction as an original Fibonacci on the smaller time frame. So, but because I was monitoring the 1 hour chart, you know, now, and again, this goes in the nose of the concept, right? Oh yes, but the higher time frame controls the smaller time frame, and this is true. But when we are talking about the Fibonacci's, everybody, we should wait. I mean, Passion, can I still enter? Yes, you can. I mean, you know, it's up to you. But you are going to have a much better probability if you wait for the market, because we don't know what the market is going to do, right? So trade what you see. The market broke the original Fibonacci on the 1 hour chart. Fact. This is a fact. Sub-C is confirmed in the daily. Thank you, Miguel. One more. The Sub-C is confirmed. Yes, the JP Morgan Super Chase robot. Exactly. Exactly. So, can I enter here on the daily? Well, yes you can, right? Because you don't have anything technical that is telling you not to enter. It's a great trade, right? It's still a retracement trade though, but still a great entry, you know? It's a great setup. But because we are learning the concepts and the rule how to trade the Fibonacci, so, and you have all kind of traders right now. You have traders that are going to enter, and you have traders that are going to stay out. So what should we do? Well, if you are learning the Fibonacci's and if you want to trade retracements, you are going to draw your original Fibonacci on the other side, on the 1 hour chart, and you would wait before you short the market, and if you are going to have a signal, you are going to wait. So here is where the market broke. So this Fibonacci is not valid anymore on the 1 hour chart. Okay, not valid anymore. So our original Fibonacci on the 1 hour chart is up, right? So we are going to monitor our original Fibonacci, and we're going to adjust, and we're going to wait until the market is going to break it again. So 1 hour chart moving sideways, didn't break, then there you go. So here, another vertical line. So instead of entering in here, shorting the market on the daily chart, we will look for confirmations and convergences on the 1 hour chart after this one happens. Passion, but this is a lot of work. Yes, it is. Yes, it is. Hello, honey. My daughter is yelling at me. So passion, there is a lot of work, right? Yes, it is. So this is the A to B, ABCD, ABCD, right? We're going to do again. We're going to monitor again, and green goes to green, if I'm not mistaken. So let's see. This is the next swing, and this is where the market broke. So this is not valid anymore. The market broke our original Fibonacci in here. And what was the date? It was the 2nd of March. Maybe the counter trend lines on that downtrend, the last one before the signal takes longer to form. Maybe yes. How would this be different if you were trading on the 1 hour time frame? You're going to use the same concept. The same concept, time to shine. You would buy the market or short the market on the 1 hour time frame, and if you would trade retracement, you would monitor the swings on the 15-minute chart. Great question. Great question. So let's go back on the daily and see what happens on the 15. On the 15, you know, look what happened. You know, so we had a clear signal, everybody. Yeah, don't tell me no. Okay, I've been there. You have a clear signal to enter on the 15th April. What was this? 10-9. Okay. So we have a clear signal here to enter, you know, and we would lose. We would lose, right? We would lose. This is the arrow, our stop loss. We learned about trading the Fibonacci. Our stop loss would be somewhere in here, you know, right? Above this sub A, this would be our stop loss, and we would lose on the trade, right? But if we would monitor, everybody, if we would monitor the 1 hour chart, right? When this happens, this vertical line, let's make it like this and like this. I mean, you can do all kind of stuff, trading the retracements and the Fibonacci's, but this is one of the great concepts, you know. A contrarian Fibonacci is going to be still risky, everybody. Remember, you don't have nothing, it's 100%, and also Fibonacci is not 100%, but a contrarian Fibonacci would be less risky as a tool when it's going to equal as direction. And in this example, our contrarian Fibonacci on the daily, sub A, sub B, sub C, sub D is down, but our original Fibonacci on the 1 hour chart is not down anymore because the market broke. So this was before, right? Tell me, everybody, can you understand this? Is this difficult to understand? Everybody? This quadrant in here where the market broke our Fibonacci is this quadrant in here. Okay, this quadrant is this quadrant. You are looking exactly at the same thing. I'm going to draw you the counter trend line on the daily. So this was the counter trend line, everybody, on the daily. So the counter trend line on the 1 hour chart equals the counter trend line on the daily. You are looking exactly at the same thing, and the green quadrant, when the market broke our A, of the original down Fibonacci on the 1 hour chart, this quadrant is showing you later on that the market, where we get to the blue one, to the vertical line, the market would stop us out on our contrarian Fibonacci when we were trading the retracement on the EuroCAD daily chart. So you would go to the 15-minute time frame. Yes, sir. We learned about relationships between time frames, right? So if you are shorting, if you are trading a retracement, everybody, on the 1 hour, 2 hour, 4 hour chart, the smaller time frame that you would monitor the Fibonacci is the 15-minute chart. If you would trade a retracement with the contrarian Fibonacci on the daily, then the smaller time frame would be 1 hour, 2 hour, the 4 hour chart. Tell me, everybody, is this difficult to understand? I know it's not easy, right? But can you make sense of the green quadrant, everybody? Can you make sense of the counter trend line? Can you make sense that you are looking at exactly the same thing? And if you would monitor the 1 hour chart, and when the market would stop your break, when the market would break your original Fibonacci, that maybe you would not enter on the daily, even if you have all the technical reasons to do so. Does this make sense to you, everybody? Oh, Passion, this is a lot of work. Yes, it is. It is. This is, everybody, this is one of the lessons if you are learning and if you want to use Fibonacci's to trade. And especially, if you are going to trade the retracements, you have other tools, no problem. But if you're going to use retracements, if you're going to use the Fibonacci, the contrarian Fibonacci, to trade the retracements, this is one of the lessons that you should watch 3 or 4 times, maybe 5, in order to make sense of the concepts and in order to train, the time frames that you are trading. Miguel says, not easy. Christian, not easy. Zuelius, yes. Interesting concept. Everybody, yes, it's not easy. Good news, everybody, if you don't understand the contrarian Fibonacci, if it's too difficult, we are always telling you, right? You can accept what we are teaching you, but you can also reject. Nobody is forcing you, We have traders that are trading just the original Fibonacci and they are making pips and money, Okay, so if it's too difficult, too many concepts to understand, too much hard work to follow, I need to monitor 2 charts in the same time, which is true, just don't use it, But at least you know how it works and the concepts, right? Patak says, yes, Albakti, it's a bit to take in. Miguel, this webinar is a must-see again. Yes, sir, if you want to learn, why not? Very interesting. Thank you, Annie. What happens further on when you draw on the 1 hour? Are you talking about trading or are you talking just in general? Time to shine. One more concept, everybody, before we finish for today. Let me see how the market was proceeding. It went up. Okay, I'm just going to tell you, okay, because we don't have enough time. In the meantime, I'm going to wait for Time to Shine to answer to me. One more thing, everybody. One more rule in trading the contrarian. When the contrarian it's like this, everybody, you should stop trading the retracement. Okay, this is the last rule. So you can make money, and of course this is riskier than the extension, but you are going to have 3, 4, 5 swings, retracement swings, it depends on the time frame. But when you come to this level, then you must stop trading. Stop trading the retracement. Retracement. Why do you think, everybody? When you come to this level, why you must stop trading the retracement? Short-term misleading indicator, hence proved. Yes, sir. Thank you, Patak. It's okay, don't worry, okay? Thanks for the webinar, man. We are not done yet. You know. Wait a second. We are not done yet, Salbakti. Wait a second. So, question, everybody, before we finish for today. And this goes for all the time frames. It doesn't matter 15-minute time frame, 1 hour, 2 hour, 4 hour, daily, weekly, monthly. When the retracement goes until here, why you must stop trading? And I don't care what you have. Oh, but it's a perfect trade, you have all the convergences and da da da. It was also perfect trading here. Technically speaking, we didn't have anything not to enter. And we lost, right? So I don't care here, you know, oh, I have great risk reward and I have the Super Morgan JF Forex robot expert advisor telling me to short and it's blinking all around the platform, you know. I'm telling you, stop trading the retracement. Why is that? Because it's a conformed C. Yes, sir, it will reverse soon. Remember, everybody, sometimes, okay, sometimes it's going to do this, right? But everybody, you are right. Talking about probabilities, 9 times or 8 times out of 10, the market is going to push up. Yes, sir, you are correct, because it found the conformed C, you know. So here is like, you know, better safe than sorry. Oh, I went against the concept and I won. Well, you were lucky, you know. Sometimes the market, okay, is going to do this, right? We have losing trades, but 8 times out of 10, the market most likely is going to reverse and the extension is going to start. Time to shine, because it's a conformed C, Miguel says it will reverse soon. Yes, sir. Time to shine, 80% chance the market moves up. Yes, sir. Zuelius, original conformed C. Yes, sir. King, thanks for the hour. Passion, thank you, King. Christian, conformed C. Yes, sir. Dennis, it's near the 8th most highly reverse. Yes, sir. Yup, ready to enter in original extension. Friends, don't forget to like. Thank you, Salbakti. We always appreciate a thumb up. Okay, everybody, see you back tomorrow with another lesson.